Hey Alpha Fam, welcome back to another episode of Alpha Commission. Today I'd like to talk about the hyper-bullish case for crypto. To do so, I'm going to be just reviewing Bitcoin's chart. It is the leader in the crypto market. So generally what you see happening in the crypto market down the line first happens on the Bitcoin chart. And while there are some altcoins that are just a little bit extra bullish and tend to front run Bitcoin, you're going to get a lot of mileage out of analyzing the Bitcoin chart, and that's why I take a look at it so often. Just getting down to business, we can talk about bullishness in a couple different ways. First of all, we can just say, Bitcoin in general has a bullish chart, right? It just over time, it just goes up. Over the years, it just goes up, right? So up, up, up. And so on the monthly, on these, higher time frames, of course, crypto is bullish. We already know that. We're just a fraction of the adoption in the world. And once, there is kind of a consumer, mass market, then we're going to just see this market explode. You're all very early. You've heard this spiel before probably, but of course, we're not really concerned with the higher time frames because we're trading on the lower time frames. We're trading on the mid time frames. We want to find out, what can our money do right now, not in 10 years, right? So, as Bitcoin is pushing 42,000, coming up from that 32,000 just a month or so ago, we really do see some progress in the charts. We're pointed up, we're no longer pointed down. You can see these two major epochs of just dumpage, right? Just raw dumpage. And now we're finally getting these pumps, series of pumps and higher lows. However, we have not been getting higher highs. So that does beg the question, are we really bullish right now? Or are we just in kind of a holding pattern until something gives? Whether that means we shoot up or shoot down, that's the question, right? Well, to answer this, I want to just go over a couple factors because, again, we've reviewed all the things that could go wrong. Let's just go ahead and take a look at some things that are going right. And I want to start out with the VIX. I've gone over the VIX several times, and I think you guys, enjoy this. I've seen some people start to adopt, looking at these stocks and these volatility indexes after I started showing them. So I do think that this is having an impact, and people are understanding the point that I'm making here. We've been following the VIX all the way back since it was in this, kind of Goldilocks zone of low volatility, which really helps stocks survive. When stocks do well, then crypto does well. Okay, that's the relationship. If stocks do well, then crypto does well. And if stocks do bad and if volatility gets too high, then stocks suffer, and then crypto suffers even more. With all the things going on in the world, the volatility was just skyrocketing. And so for the last couple months, I've been very careful to be analyzing the volatility indexes with you almost every day. And what we found is that we came down to this support diagonal, which we've just been growing leaps and bounds off of. This is your COVID era over here, if you just want to get an idea of just how volatile things can get. And then, of course, if you're in this type of a zone, then you get pretty low levels of volatility, and the stock market does really well. We were threatening to get up to those type of COVID era volatility levels, but it seems that with the Fed, finalizing their plan and finally getting it out there, that a lot of the market can now relax. The uncertainty of those Fed increases has been removed from the market. Likewise, we haven't gone into a nuclear war. It looks like Putin, it looks like NATO, it looks like Ukraine. They're all doing just kind of traditional warfare so far, and the threat of nuclear war is kind of diminishing over time, whereas the fear was really out there, right? So all that uncertainty about the Fed, all that fear about potential nuclear war, and then doubt, do people really think that Bitcoin could have a future if it didn't have a good correction? Well, we've kind of had a nice correction now. In fact, all the stock market had a nice correction. Let's just go ahead and look at, some of these things, right? MicroStrategy, gaining some ground. Tesla, just getting into these areas that I had marked off a while ago as being where it needs to be to stabilize. Definitely recovering. Let's see, we've got the Nasdaq just doing incredible. We're back into that good zone, that good safe zone, and hopefully we can just keep this support. The index, we've got Apple doing the same thing, getting up above these key levels I've marked off. We've got the again the Nasdaq. Skip bonds. Yeah, the S&P 500, breaking trend bullishly. And, when I drew this, we were all the way up here. So when I drew this down arrow, we were all the way up here, and I was just projecting that we were going to have a major correction. I assumed that, this was going to be the floor. There was a couple reasons why, momentum became flat to neutral. We were starting to put in higher lows, and, basically, uh, the selling volume was lower. So, while we could have considered that this was just a pause, based upon people waiting for the Fed decision, we do see now that it is a bullish breakout of trend. This thing isn't popping back down, and so it looks like, at least temporarily, at least until perhaps something crazy happens in the war, or at least until the Fed does something unexpected, we have kind of put in a floor. And so even if we look at the Russell 2000, which is considered far more risky than the other types of stocks, you can see we're getting back up to those stable levels after really flirting with these extremely dangerous levels, which could have had us dropping quite strongly, and that would have been a very scary fall, not just for the stock market, but also for crypto. So all of these things are very good. We're finding support in the markets, right? We're finding support, and that is going to lend stability to crypto, right? Here's the Dow Jones. Again, they have a diagonal here, but look, we're above that diagonal. And if we can use this as support, then we're in recovery mode, or at least temporarily we're good. And so, could this be some type of relief rally that then ends up turning around? Sure, there's always the possibility that this is just a relief rally and then we come back down and start continuing our way down. Nobody says that we're fully out of the woods. We still have the fears of stagflation, inflation. We have the possibility of a global economic recession. And so, just because we've broken trend, for a couple days, doesn't mean that, we're suddenly in a bull market. But what it does mean is that we have the potential to, right? We have the potential to. And so, look, all of these stocks, here's the Japanese Nikkei 225 index. They had a 20% dump, and of course, 10% is considered a correction in stocks, 20% is considered kind of a bear market territory. We have to see how this bear market plays out, or if we're just going to, keep pumping, and then it ends up that, this was just kind of a wash for a month of uncertainty due to war and the Fed and all of this stuff, and then maybe we can just consider it just a temporary correction before we go on our way, right? Well, a lot of stocks are still looking like this, where they are underneath their trend line, so we're not all out of the woods yet, but you do see the general trend in the market is to put in those bullish supports, right? In case of the dollar, one thing that's interesting is the dollar did seem to kind of double top for now, and so we are seeing a pullback. That's good for stocks. That's great for crypto. And so as long as the dollar is pulling back a little bit, we do have a chance to run. And just to go through these briefly, even look at these German stocks, right? Even the German stocks, which took a huge hit, They are just coming back to these key support levels. And just like some of the others, it's threatening to break trend and perhaps, catch some relief. So let's just go over the other types of volatility that we see out there. The Russell 2000 volatility, it's just dropping. Dropping is good in case of volatility, but this is the one that I wanted to really point out. The NASDAQ has fallen, it's almost back into that kind of heavenly stability level. So whatever fear was in the market that was challenging the market these last couple months, that fear, that uncertainty, that doubt, that's just not there right now. The volatility is shrinking, and that is a great opportunity for stocks and crypto. I've spent a lot of time on stocks, so let's go ahead and get over to the Bitcoin chart. What I really want to show you on the Bitcoin chart is that this could be a game changer for Bitcoin. While stocks have fallen, 10 to 20% depending which chart you're looking at, Bitcoin has fallen a whopping 50%, right? And although we could expect a kind of macro correction of perhaps 70 to 80%, what we see on the Bitcoin chart right here, that's enough to just, refuel the rocket for at least a relief rally to maybe like 50K, even possibly putting in another high somewhere around, 60 to 70K. And then perhaps we come down and do a macro correction later on. There's no rule that says that the major corrections that we see in the market has to have to happen, after this second bounce, basically. Although we do see that, right? Like if I go ahead and take out our tar pits here, you can see that we are technically still in that type of sinking formation where if this is a tar pit, these are the Gaussian channels, if we are stuck in this type of tar pit, then we're just, sinking and sinking and sinking. Unlike this one, we didn't have our hand still on the center line, which we could use to crawl our way back out. We got our head fully plunged under. We got our feet stuck into the mud and the goo at the bottom of this tar pit, and we're just struggling to get out. What's the key number that I've targeted for this hyper bullish situation? I'm telling you, it has to be somewhere above 56,000. Okay, like if we can't get into this area to grab a hold of the middle and pull ourselves back up, then what's going to happen is that this channel is going to slowly start curving over. You can see it's very slowly starting to curve. It's flattening, and then it's going to curve down, right? So it's curved up, flattening, and it's going to start curving down soon. And when it curves down, right, that's when you don't have the chance of escaping anymore. When it gets that negative, curve, it indicates that something bad either has happened or that it's going to happen, right? And if it starts curving down before something bad happens, then you can bet it's probably going to be kind of shocking, right? So we've seen this happen a couple times in the past. You do see that you can get that fall even without this negative curvature, but that was the black swan event of COVID, whereas this one was the just the corrections of the market. Now, the economic conditions, the macroeconomic conditions are all different for these things. So it is possible that even though, we have this type of second, setup, maybe, maybe we're going to be able to skirt by and make a third one and then have a correction, or maybe we just have a wave and we're now in kind of a wave era of Bitcoin. And then, we go, whenever that time is ready to just pump to the next level, right? We always have these kind of pumps to the next level. And it can take years, but when it plays out, you can just go. And the question is, do we have a big correction before that? Or was this enough? Well, again, we looked at the stock market, and the stock market is what provides a stable platform for Bitcoin. Okay, so if the stock market is providing that stable platform, then these other volatile assets, right? Then, the market can concentrate on them because instead of treating their stocks as volatile assets, they can start treating volatile assets as volatile assets, right? These risky plays. So right now, when volatility, or previously in the last couple months when volatility was too high, the stock market itself were the risky assets. And so nobody has time for Bitcoin or crypto on a professional level when you're managing your stocks as if they're your risky assets. Now we have a chance to go ahead and treat Bitcoin and crypto as a risky asset again instead of the stocks. And this has been pumped up by a couple of things. Not only the stability in the market, returning, and the fears of nuclear war and all of that diminishing, but for crypto specifically, the Biden presidential order on crypto ended up, being not much at all. It just ended up being something that's kind of good. They want to study crypto, they want to see how they can use it, they want to make it fair and, help prevent crime. And they also are interested in perhaps, a digital dollar for the US, which love that idea or hate that idea. A lot of people really hate that idea. But love it or hate it, that means that crypto is part of the narrative of the US government now. And so we have Russia talking about crypto. We have Ukraine talking about crypto. We have the United States talking about crypto. We have, all of these countries are starting to talk about crypto in a bullish way where they're considering how to use it. Whereas previously, before now, right, before the last few months, what did we hear? Oh, it was just for crime. It's, China's banning it. We kept hearing time and time again, China's banning it, China's banning it. And that was always wrecking the market. But now we're starting to hear, oh, Russia wants to use crypto, Ukraine wants to use crypto. Europe didn't ban, proof of work, mining, operations. The United States is looking into crypto. All these countries are starting to slightly change the narrative, and it's not as bad as what some of the people thought it would be, because a lot of people thought that there was the potential to just slam the brakes on crypto, especially if a country started to follow the China model, or if they viewed these type of things as a threat to the sovereignty of their, of their dollars, their national dollars. Well, all of this combined is just helping to kind of lift crypto right now, whereas we could have had a huge correction. We're just being kind of lifted, and you can see that prices are rising. We're not making higher highs. People aren't necessarily saying that it's worth more. People are just saying that it's not worth less, right? So we have to kind of keep that idea, straight in our heads, because what we could find is that we could end up pulling off one of these corrections right here, where we just skirt the bottom. Yeah, this one didn't get as stuck as we are, right? This one looks a lot more like this one. But if we can get a pump, if we can just get a lucky strike one of these days, right? If we can just get that push to the midline, right? That, 46,000, what now is approximately 47,000. And if we can hold on to that area and sit on top there, then we have a chance to have another run, which could be, into the mid 50s, right? The mid $50,000 range. And if you can get on top of the mid $50,000 range, if you can get to like, 57,000, 58,000, then you have a chance of putting in a new all-time high. You really do, right? Let's just say that, everything goes okay, then the markets would allow for that. And again, like because of this Ukraine-Russia situation, we haven't had nuclear war. We haven't had NATO enter the war, but what we have had is governments all across the world increasing their defense spending. And so suddenly you have this injection just from the US alone of $1.5 trillion dollars into the economy in order to shore up the military and support military operations just in case that kind of World War III, that Cold War II breaks out between the West and Russia and their allied partners. which we didn't know if it would or wouldn't. China and Russia signed a pact saying that they would, support each other in unlimited ways. And you know what? It looks like the US is winning. It looks like the US is winning. The US has set up a lot of things in motions where we've gotten all of our allies together, and love them or hate them. Again, it's one of these things, love it or hate it, love them or hate them. Biden has controlled this situation incredibly to the advantage of the United States. I'm not saying that, you know, that the Ukrainian people aren't suffering terribly, but that's not on us. That's not on the U.S. Right? I mean, ultimately, Putin made that decision to kill people, right? To kill babies and women and fire on pregnancy hospitals, maternity wards, all of those things that he's doing, which is just disgusting. He's taking plays right out of Hitler's playbook, and you really analyze it, he really is just acting like a crazy fascist from 100 years ago, and it has no place in modern society. But to his credit, I mean, Biden is playing this like a modern man, for all of his, all of the amount that he has slowed down over the years. He is playing it with modern politics and conducting something called hybrid war, which I highly suggest you research. I'm not going to go over it here, but that hybrid war has just unified the entire world to the cause of the US. And I do say the US because we are centralizing it, even though it's in the name of Ukraine, which it should be. But the US has organized this and conducted this hybrid warfare to such an extent that it's just overwhelming, and we are actually winning this thing, which nobody expected. Everyone thought that Putin was just going to come in and just roll over Ukraine, and just that the West would be too afraid to intervene, and that we would just stay out of it. But that's not true, and you can see that you know although the words that people use on television and in the news are always going to be negative or kind of diminish what's going on, behind the scenes you know what's going on, because we just spent 1.5 trillion dollars to support it. Okay, a country doesn't spend 1.5 trillion dollars unless they really are going to be using that in some way, right? In emergency packages. You don't do that. You don't see Germany come out and increase its defense spending by 2% or more, and all of these other countries just mobilizing these operations. They're all injecting money into the economy, which, although these aren't stimulus checks to consumers who then go and buy crypto, it does provide liquidity. It does provide liquidity to the markets, and you're seeing these sectors just pump. And when these things pump, that does give the opportunity for the rest of the market to pump, including crypto. And that could be all that was needed to save us from falling off the ledge over here and, falling to hell. Maybe we have a chance to get back up to that midline, hang on, and even jump for another ride before we, have to deal with things later on in the summer. So let's just move on from the Gaussian channel and politics, because, of course, those things are important, but we can also talk about some structural things going on. And the first thing to notice would be that, these sloppy lines that I showed you a while ago, I told you, I'm not going to make it pretty for you guys, right? Like, this is my money and I'm charting the way that I want to. And so, if it doesn't look good to you, I don't really care, as long as I can understand it, and so that I can trade it. And we were around here when I was showing you this chart, and I said, look, this may look sloppy, right? This may look very sloppy, but in fact, this is the key to whether or not we're going to pump or dump to hell, okay? Because if we get under this line, we were just like right here. I said, if we get under this line, we are going to dump to hell. And the only way that we were going to get out of this is if we did a step up and a step up and a step up. And while we had these crazy like pumps, in the previous days, and these kind of crazy dumps, right? What you found is just like what I was saying. We just took baby steps up. 1, 2, 3, 4. And now we're sitting up here, hovering in the air, which is a really good sign, to be honest, compared to, trying to test this to break down again. So yeah, I do think we have potential. Obviously, we have heavy resistance up here, but just structurally, we are walking the line. We are walking the walk, and not just talking the talk right now. We are moving up. We don't have our higher high. That's the missing ingredient, but we are walking the walk. And the fact that you can use your diagonals, you didn't need horizontals to figure this stuff out. You can use your diagonals to figure out exactly where we might break down to, how we might drop, where we might catch support when it's one of these longer, stronger supports. And so that was a very strong support. It caught us, right? It caught us here. It caught us here. It caught us here. This one right here. And then of course we bounced off it, and got trapped under it for huge moves. We got trapped under it, and then we kept trying to get above it, and now we're above it, and we're also above this trend line, which is very interesting because we've previously been talking about this trend line, this trend line, this trend line, and so we're moving up, right? This is now a much more positively inclined trend line. And so the fact that we're like holding on to this one is a very good sign. But we'll see if we break down or not. We'll see if we break down or not. Keep this complexity in mind of this interaction of like all these. It's basically 6 different trend lines right here. That complexity in mind, because these were much more simple moves, and suddenly we're getting a little bit complicated. But moving aside from this, and by the way, this is bullish, right? I'm making the hyper bullish case, right? If we can just keep walking up this trend, the same way we walked down this trend, just think about that. If we could walk up this trend line, the same way we walked down this trend line, whether we meander or whatever, then that would be hyper bullish, right? This is very steeply inclined. And even looking at that, again, when we were back here, I was telling you guys, I drew this out for you. I drew this out. This is the path that we would have to take up. I would only get bullish if we took that path. And I gave you an alternative. I said this was the path that was going to lead us down if we didn't just break down here. There's a good chance that if we start bouncing below this trend line, that we're just going to fall to hell. We're going to be still on this trend that just takes us down, right? And this will just be a blip on the screen. But the fact that we got above this one, again, that's just super bullish. And I just wanted to point those things out for you because, I just want you to understand that even though some of this stuff seems like just random brainstorming sometimes, there is continuity with it, and there are validations and invalidations, okay? I'm not trying to convince you of one way. I'm trying to show you how we can get invalidated. And one of those things would be if we break down from this trend line, right? Then we're going to be falling back on these trend lines. And then that's going to, although this has been very good support for us, right? Very good support. So it wouldn't be the worst thing in the world. But, if we did fall down to this type of 39,000, if we broke down from there, I would be expecting significantly lower, right? Kind of like these catastrophic falls, right? Where you almost lose it even, right? And, that could bring us as low as 35,000. So we really want to hang on to this line, and then this is going to be our last line of defense before we start getting bearish again. This is neutral, until we get a higher high. This is bullish, and this is bearish. So right now we're bullish. And I just want to point out, these kind of like M patterns that I've been marking out. These are probably based in harmonics. There's always like bullish bats and like all these, bearish blah blah blah. I'm not too big on harmonics yet, and that's only because of my own, minimal training in it. But I just wanted to point out that these actually probably do have solid patterns behind them. But in general, we can just see what's happening. These M's, pointed down, M's 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 pointed down. And what do we have here? A breakdown in that. I'm making the hyper bullish case here. This is important. we broke down. I mentioned in the last episode or the one before that that you know, I can't see this pattern anymore. This pattern that was just shoving us down because the arrow always led lower than the M formation. I said it's not appearing anymore. I can't find it. So, in all of this garbage here, all this choppiness, again, it's that complexity, right? I told you to remember the complexity of this change right here, right? This was a very simple line to be following. We got it. We were above it. We broke down below it dramatically. We got above it. We almost lost it. And then we grabbed a hold of it again, right? And so now we're able to claw our way back up. And so what we're doing is we're not putting in bearish M patterns anymore. What we're doing is we're starting to make a new type of pattern. And so far, these look like just little mini bull flags. They can easily break down, so just be aware. Just be aware. But as a bullish case, it's really bullish that we're no longer making these M patterns. Now, where are we really? So again, I've showed you this wedge in a couple different forms. I believe we're still in this wedge. I don't consider where we are right now to be somewhere that you should be buying. I'm hyper aware that we could break down at the top of this wedge at, virtually anywhere, right? So, do I recommend people to buy in right now? No. And also for my other charts like Cadena and Curedo, I was telling people to buy in this zone. This was a confirmation for me. I told people I called this one. I called it in a forum. I think I called it live on a group chat, which was recorded. I said, buy in here, buy in here. I called these ones, and so you know these were the buy zones that I called out. And if you didn't buy here, and you didn't buy here, and you didn't buy here, and you didn't buy here, you didn't buy here, 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 or last resort here, when are you going to buy in, to be honest? Because these were the lows and we were making higher lows. When were you going to buy in? You know, this is months of possible trading. So when were you going to buy in if not down here? Well, I saw some people like kind of bragging that they bought in around here, which that can make sense actually because this is just a neutral area. You can see that we're moving up, we're getting, much higher highs now. I mean, higher lows, pardon me, compared to down here, right? This was just on one trend, but now we're getting higher lows on that more vertical steep trend, right? So this was actually a pretty smart play, right? If you're a very conservative, that's a very smart play for a conservative portfolio. And but now we're entering that zone where I do think it's a bit risky because this first heavy resistance is so close to is so close to your buy-in that you barely have any room to move. If this market does turn around, like let's just say that we have this type of thing going on, you could easily imagine us coming down, right? You could easily imagine us coming down like this again. And so if you bought in up here, you're basically buying in at the top of this resistance. Now we also have this resistance up here. So if you're lucky, we pump through and then you can sell up here, but we still might get smacked down. And so this just isn't a lot of headspace. I want to be buying down here. I don't want to be buying at the top of this wedge, right? There's a reason why I made this wedge. There's a reason why I marked out these type of green areas and showed this stuff to you in previous episodes because this was the good buying spot and this is the selling spot and it's narrowing. The headspace is shrinking, So so if we do have a pullback, you might consider that is a good spot to buy, but I wouldn't be FOMOing in right now, right? Like you could have, like if we were down here and we were pumping, you could have FOMOed in. You could have FOMOed in, or down here and we started pumping, you could have FOMOed in like here. But you don't really want to be FOMOing in once we're getting to this proven resistance diagonal and this proven, resistance, especially not this proven one, right? Because this one is a very heavy resistance. And that's just my advice. That's what I'm going to be doing. You can do what you want. Obviously, I'm not really advising you guys. I'm just talking to myself here. But that's my plan, okay? Let's see. We've also got just a little bit more of a layout of this buy zone. There are some key levels here. Like I said, I do think that we could break down here again. But because this is a wedge, I do think that if you're going to buy in, you got to plan for higher levels as you go along. This one's pretty much gone. This one's probably gone also. There is a chance that we could come down here, but I wouldn't bet on it. I wouldn't bet on it. And of course, we are in this, we are well above that kind of golden zone that I was talking about within this type of range. And just to add a little bit to that, here are the horizontals. I know some people prefer horizontals as opposed to diagonals, which are my favorite. But they do tend to just say the same thing. It's just which one do you prefer? That's all, right? So, you can see like this is resistance right here, resistance right here. This is resistance right here, resistance right here. And it's pretty much on the diagonal. It's pretty much on the horizontals. Neither one of these models gets it correct. So if you're doing both of them, good for you. But, either can be good. I generally use the 5-day, and then occasionally I'll fine tune it with the weekly and the daily. But I generally find that the 5-day works best for me personally. And you can see just how the price action pretty much moves through there. Of course, some things get missed, right? Some things get missed, but otherwise you have a million lines. So, this is good enough. And for me, because this is kind of like the golden zone, the middle of the chart for this whole movement of Bitcoin, this whole, last year basically, this is kind of the center of the chart. If you were buying here, I just kind of think of it as neutral overall. And it's okay because we are on this kind of like upward trend here. We do have this type of upward trend where if we continue to be supported, then this is still a pretty good zone right now. And, this would be our kind of really super over. You don't buy up here, right? If you could ever buy down here, in these 20s or the 30s, it's probably a good, it's a good proposition in the long run. Once you get into this golden zone, then you're kind of, you're just average prices. You might have to wait a long time till you make your money, if we have a bad market, if we have a global recession. And then just don't even think about buying at these levels, right? Just if we get close to $50,000, just don't buy. Okay, that's my advice to you. Wait for whatever major pullback you can of 20% or something, because I'm reluctant to give anybody advice, to be honest. But do what you want, but just I would not. Okay, so think about it. Think about it. Because I'm making the hyper-bullish case. The hyper-bullish case suggests we might not come back. So if we get a pullback, you might consider taking some positions. Just if you haven't yet, I already told you where I bought and where I was thinking about buying. And if you haven't yet, you should, just make your plan. Make your plan. Moving on from these type of horizontals. Just want to show the kind of diagonal, you know, channels that you can see that we're in. This is also a diagonal channel down, kind of diagonal channel down. And you can see sometimes we broke above it, but in general, we weren't able to hold this region. And so what we're doing right now is very interesting. It looks very similar to last summer. Very similar to last summer. It's just we didn't have the capitulation moment. And it's possible that the 1.5 trillion, dollars of military spending, it's possible that the Fed relaxing the market, it's possible, that, the market was ready to capitulate and have like a final moment before it broke out. But it's possible that things are just relaxed enough and that the volatility has come down enough that we do end up breaking back into here. What are these key levels that I'm looking for? Because these levels have been very important. If you want to say that we can get supported in this new level, just like back here last summer, you had to grab the second channel, okay? Like this is a mid channel, right? So you had to grab the second one. The first one you got rejected from. Just kind of poking your foot in, testing the temperature, seeing if you can hold it or not. And if you can't, then you get pushed back down into this wedge. See, we just stuck our toe in. We couldn't hold on to it, so we just got pushed, getting pushed, getting pushed, getting pushed into this wedge. And you don't want to break down from that wedge, but you're just getting pushed into the corner to see when is the possible time when you can grab onto this channel to get a move up. And we are getting closer, right? Look at this. We're so close. In fact, look at the price right now because obviously I made this well in advance. I've been using these charts. Look at this. Look at this. Wow, look at almost perfect, man. People who don't believe in using diagonals, for shame, man. Because look at this, pushed in, got totally rejected. Tested it again. See that? Tested it to the dollar accuracy. Tested it again, almost to the dollar accuracy. Pushed in again, got rejected, almost to the dollar accuracy, and tried again, got rejected, almost to the dollar accuracy, and now we're going down. So you see this diagonal, like I'm not just like talking out of my ass here. This diagonal is super important, very, very important, right? And I put a lot of thought into these things. I put a lot of thought into all of this, and you can see that when we do get that pump, what you're going to want is pretty much the same thing that happened over here. You have this level that poked in, right? It's a little bit higher now. So people who are just using horizontals, watch out because it's a little bit higher now. And so that level is going to be 56,000. Previously, it was, 53, 53,000. Pardon me. Why am I saying 53? 41,000 approximately, right? Something like that. And so, we're in this area now. Can kind of adjust this type of support line here. You bring it down just a little bit. These are human beings trading, right? So, obviously the price is going to be, popping up above it and below it. You're going to get all these little wicks and things. Look at this drop. It went right to that purple kind of midline, right? These wicks stopping right here at this midline. This wick stopping right here. This one stopping right here. These ones stopping right here, right? This one dropped down, came right back up to this purple line, right? This one, this wick is actually different on every exchange, whereas this one is pretty similar. This one is different on almost every exchange. The average is around here, not down here. And so also you see this little, you see this? You see this little like interaction here? And this wicking right here, it got rejected, it got rejected, it got rejected, it got rejected perfectly. So this diagonal is also very important. And so what does that tell me? That if we're going to have like a pop-up during summer, we have to hold on to, we have to hold on to this, middle area, just like we did over here, right? We have to hold on to this mid channel. This first channel doesn't count. Just because we get up there, it doesn't mean anything, right? Like you're not really holding on to this yet. You got to pop up to the mid channel, and then you might get rejected off of this midline, right? You might get rejected off of this midline, come back, come back, And then what you want to see is you're passing this area right here. You want to see that you're passing the center. And if you pass the center, hey guys, we're bullish. Like we are super bullish. We're going to pop all the way up here, most likely. Of course, we'll probably test like this channel, just like we did right here. Look how perfectly that was tested, right? Look at that perfectly. Don't tell me these diagonals aren't real. These diagonals are real, right? They're powerful, almost to the dollar, right? And so you kind of test these ones, and then that's going to bring you to 50,000. And if you follow a similar type of arc, right? Let's just make an analogy, right? So you follow a similar type of arc, then maybe you could see, you know, the mid 50,000s. And let's just say that it's parallel to this one. Yep. So you're going to see like $56,000 approximately, right? And so, that would be the bullish case that I would make. And all of crypto is going to benefit from that, okay? So if Bitcoin is able to do this, all of crypto is going to be pumping. You're going to start seeing, of course, Bitcoin is the one who always benefits in the beginning, then maybe Ethereum and some of these altcoins that follow Ethereum. But in general, the altcoins come next after that. And so if Bitcoin gets all the way up here, altcoins are going to start screaming at this area. And that's going to be a great time to take some profit or de-risk from your altcoin positions, because who knows if we come back down. But if we don't, you can kind of understand what's going to happen next, right? Look what happened. We tested this purple line, came back down, retested this diagonal that I've marked out. What would that be? Approximately right here underneath that line, kind of scaring people to death, right? Scaring people to death, getting them out of their positions. And then we pop up to the top here, right? And that could be as high as like 65,000 or whatever if we have that very bullish situation. And then maybe we could even get on top of that. I won't go that far, but you can pretty much hear the narrative that I'm delivering in terms of a bullish and hyper bullish market. And so if you wanted to start positioning yourself for that, you probably should, because I'm telling you, and I've shown you several reasons why to believe that we are entering a more bearish, a more bullish era for the time being. We don't know what summer's going to bring, but right now the market is turning. And the only thing that we have to wait to see is if we get rejected here, just like we got rejected here, 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 here. We keep getting rejected at this underside. And look what happened last summer. We got rejected 1, 2, 3, 4, 5, 6, 7, like 7 times, right? So 1, 2, 3, 4, 5. Could there be a couple more times that we get rejected? I don't know. Do you consider this being rejected also? So maybe 6, 7, right? Maybe this is the end of it. Well, I just want to show you the path that we've kind of taken so far, because this is like a kind of like an M with then like a bullish lightning bolt at the end. And if we wanted to get through this, I'm just showing you the way through there. Of course, if we get rejected now, you can probably expect capitulation, just like we had right here. And I just wanted to point something else out. This is one of the fractals. This is one of the fractals that we've been following. And I told you, you can go back and review this. I told you after we put in this next leg, I would expect a pump up. And what did we get? A pump up. And we're still pumping. We're still pumping. So like we're still going on this and I called this down. I called this sideways, I called this down, I called this neutral, and I called this a pump up. And that's what we got. So again, like these fractals, in the right hands, under the right interpretations, can be extremely powerful. And right now, you can see a little bit of a wing, a little bit of a wing, you know. It's getting very distorted compared to this side. Look how tiny this is compared to this, right? So it's all distorted now, but we're towards the end. I don't really expect to see this play out much more. Maybe because it's so tiny now, what we could really just see is like maybe a little pop up. And then we have no idea what's going to happen next. Is this going to be a rejection because, this thing got rejected? I don't know. If you believe in fractals, the fractals are kind of, they're saying we should go up a little bit more. But after that, I think it's just too tight. It's too tight. It's too broken down. Again, this was the reversal pattern that I discovered, this W reversal pattern, and I've been following it since the very beginning. I identified the W right away. I've seen this pattern so many times. I identified it right away. I shared it with you, and we've just followed this one. The only reason that this pattern didn't respect, what we thought it should is right here. I believe that was when Putin attacked the nuclear power station, and just fear, like the whole market just turned ice cold. Their faces turned white out of fear. And so, yeah, this pattern was very important to play out, and if you had considered it, it just would have given extra confluence and extra confidence in the market, okay, as we went through these stages. But overall, that one's bullish. It's pointed up right now. That's bullish. And if we can break out of that pattern and create a new pattern that's a bullish pattern, with the bullishness returning to the market, then again, that's the hyper bullish case, right? So just going forward, because I've got a lot of stuff for you, we are breaking out of these like egg patterns that I've identified here. Don't really know what to call them. They're just kind of like eggs or something. And you can see how we respect the side, we respect the top, we respect the side, right? So I consider this like, pardon me, being inside of an egg, and then we get hatched and we can pump, or we get hatched and we can dump. And look, it's almost always in this same area. So we're very close to that area that could either dump and break down, in which case it might look like something like this, right? And then we would expect like a 20% drop or something, you know, or we're gonna do something like this. And it's it's this key area. Every single time, it's this key area, right? You see that drop? Straight, whenever we get out into that area, we've had either a drop of like 20% or we've had a pump of like 20%. Okay. So we're there right now. I'm giving you fair warning. Get your positions in order, get your risk management in order because, something interesting might happen. Something interesting might happen. And, this is a lot of information. This is a lot of study. I put a lot of hours into this. And if this helps any of you guys, please leave a like, please leave a comment, subscribe. I really need it to, keep this content going. And, I appreciate you guys sticking with me because I know I'm not the easiest person to listen to. And also, a lot of my theories are kind of convoluted and jumbled a bit. But I hope I'm bringing original content that you don't see anywhere else because I'm thinking out of the box and thinking originally, whereas a lot of other guys are just straight up copying what other people say, and then they come and like tell whoever their followers are, they just repeat something that they like listened to like two other like videos like talking about it. But I'm making original content every single day, and it's straight out of my mind. Unless I tell you that I, heard about something from a particular guy, I promise you it's straight out of my own mind. And, if it happens to be similar to somebody else, that's just, great minds think alike. But, and if I'm wrong, I'm wrong. Go ahead and tell me in the comments because I just don't, copy, YouTubers, and I honestly don't care what a lot of those guys say. I respect my friend Crypto Retta a lot. I respect, Eric Crown from the Crypto Cave, and to be honest, I just don't pay attention to a lot of other guys. I know there are good ones out there. I just prefer to think on my own, I guess. But say okay, so we might break a couple eggs, right? Got to break a couple eggs to make an omelet. So let's see. Moving on. This is what I consider to be the real origin lines of Bitcoin. Some guys have their ideas about what the origin lines of Bitcoin are, but this is what I believe it is. And so I believe it's actually this one, where this is undervalued and this is like way overvalued. And then we're in kind of an overvalued area. So I do believe that we can come down lower. And let me just go ahead and put this line graph on so it's a little bit more clear, because this is the contrast. And I think that this correction was needed because we were overheated, right? Like, we were overheated. There's no doubt about that. And so eventually, I would expect that we come back down to this kind of master origin line where we cool off, or we go sideways for a year, just kind of like going up and down a little bit, or pumping, kind of pumping up here, then coming down to the midline, pumping, getting a little bit up, and then dumping or something. But anyway, we will probably meet this line again. That's my point. So I just want to keep it realistic that we have a lot of room to pump if we do, if we do get as overheated as this. Like, we could pump all the way up to 200,000. Like, and we would still be within the origin lines that Bitcoin has showed is possible. Like, there's no reason why we should be afraid to say that we have the potential to go to 200,000, as long as you also understand that we have the potential to go to 6,000 again, okay? And people say, oh, that's not possible. Yeah, it is actually possible. It's not likely. It's not likely. More likely, the ultimate bottom would be somewhere around here, right? Because this has support. And that would be around 12,000. And of course, this would take time. So, yeah, 12,000. And then, realistically, what I've shown you from other styles of analysis that I've done in the past is, yeah, 14,000 is what I would think. And it's not based upon this, it's based upon really nuanced thinking. But yeah, I don't believe that we could ever go below 14,000, to be honest. And personally, I don't think that we would ever go below, probably, this kind of like 14 to 18,000, to be honest. But I'm just throwing that out there because even though I'm making the hyper bullish case where we could go as high as 200,000, in fact, like there's nothing stopping us from that. We have reached similar levels before. If for some reason we put in a blow off top and just everything in the world aligned correctly, like we could actually pump to 200,000. But what do I think is more realistic? We have this midline here, and this midline is very powerful. Very powerful. You've seen us get rejected from it here. You've seen us bounce off of it. You've seen us, like, it supported this whole thing, but we got rejected and then got trashed when we got underneath it. So more likely we pump to here, which is approximately 55,000, 56,000. Hey, where did we hear that before, right? I just showed you a totally different analysis using those diagonal channels. I showed you a totally different analysis of how we could pump using all of those different things, and it suggested $56,000. So we could pump to that, we could pump to those mid 50s, and then we could have a turnaround, and then we would just have to wait to see if we could get on top of it. That's all. Okay, and then we might have the hyper bullish case. Bullish case, mid 50s. Hyper bullish, the sky's the limit after that. So let's see, moving on from that one, let's go ahead and take a look at this fractal because I'm doing serious in depth today. And what we're really looking at here is a very simplified pattern where, let me turn this off, where we basically have this type of, kind of MW and a dramatic fall, right? Kind of an MW. Here's the W and a dramatic fall. And then we have kind of an M, followed by another M. There's the other M, and this type of lightning bolt N, lightning bolt N. So if that's not simple enough for you, you know, like I don't know what is, because look at our price action. It's directly underneath it. So what would that imply? What would that imply? That we could have a major pullback, this capitulation. If this fractal is playing out, we could have a capitulation and then a massive pump. Okay, so we don't need to necessarily fall to 14,000 or 18,000 or 20,000. We could just stay kind of on track, scare people, and then pump like crazy because you've got all this new energy just to like pump like crazy, right? So even this kind of bearish scenario, like right here, it's still very bullish because once it's over, that could pump you, to a new all-time high, right? So getting this little bit of extra rocket fuel, just consider like refueling the gas tank, refueling the rockets can just launch you to outer space, okay? Like we don't have to fall all the way down here. If all we want to do is get to 70,000, we don't need to go down to like 18,000 or 20,000. Yeah, that we need to go to 18 or 20,000 or 14,000 if we want to launch to 200,000, right? But if we just want to launch to like 70,000, 75,000, like we can just dip down to like the low 30s and then blast off. Why do I know that we can? Because we've done it before. The same players are in the market. Same players are in the market. And if we have good conditions, then potentially we can do it again, okay? Now, we might not see this type of pump. That was the free money from the COVID era. That was the free money, just nonstop free money, just pumping us up here. And then this was after the free money. It's kind of neutral money to kind of like, it was a very liquid system, okay? So more liquid than now. So there is the possibility for the downside because people took their profit and the world is more uncertain than previously. But it's not like this was just pure, it's not like this, this is, it's not this 30 to like 69,000. That wasn't out of the free money. That was just because we had liquidity, we could do it again, right? So we could do it again. We could do it again now that we've had a correction. And so don't be too afraid. If you have a chance to buy again, consider it. Consider it. Just have your stop losses where you think is reasonable, and consider that we might actually have another run. Again, I'm making the hyper bullish case. And oh, what would that align with? Hey, that would align with a 20% dip. Where have we heard that before? Well, I showed you, right? I showed you my yep, this chart. I showed you the case that I made for the algorithm here. And the algorithm suggested, that we would pump up into this area and then potentially have a pullback, right? So we're now in this type of area. This algorithm has been 100% correct for the last several months, 4 months or so. It's just been 100% correct. And it predicts that we're going to be in this zone. And we're in the zone, and we might have a 20% pullback after that, okay? So I can show you, I've measured everything out. A 20% pullback would bring us to, 38,000 if we get all the way up here. And if we have that 20% pullback and just from here, then it could bring us to 34,000, right? 34,000. So if we do end up getting those numbers, unless we break down from 33,000, I'm not going to get out of the market. I'm going to consider that those are great buying opportunities for the potential to skyrocket, okay? Now, I am going to have a stop loss just in case we do have the bearish situation. So, do your risk management. But again, I'm not advising you. I'm just considering for myself. And again, why can I think so bullishly? Because every time we've had this formation, this algorithm play out, we've had this nice sweeping cup, this nice sweeping cup that just holds it and lifts it up, holds it and lifts it up, holds it and lifts it up before dropping it down. But the thing is, if we can break the cycle this time, if we can get out of that cycle, then at least we should be able to come up to this area and maybe let's just make it a moderate area and say like 35,000. Just test 35,000 one more time, perhaps, right? And then, then be on our way. Okay. So just consider this. I've talked about it before. I'm not going to go into too much detail. We do have this a fixed range, which is telling us that that 37, 38,000 is kind of, this type of area of interest. And so if we do have a pump and we do have that 20%, pullback, which has happened time after time after time after time after time, if we have it again, then that would bring us to 37,000. That's very confluent, right? So let's see if we can get into there. And by the way, where would that pump bring us to 46,000 first before we have that correction, which would give us the best chance to continuing bullishly also, right? It would mean that we have the energy to break these kind of bearish systems. We just have to see if we can pump and get over it. That's all. Either we're going directly there or we could have a pullback and then pump up, right? Those are the bullish cases. And just having a pullback, that's not bearish. We can have as much as a 20% pullback on Bitcoin. And Bitcoin is so robust, the crypto industry is so robust and so volatile that a 20% pullback is, again, like we do it all the time, right? We do it all the time. We have 20% pullbacks and then we launch up from them. So don't get too scared by that. You just want to protect yourself just in case we go lower than 20%. Okay, 20% is kind of the threshold. And then we also have, something that I wanted to show you, which is this, macro channel that's being carved out here. And I don't know if I should show you this right now because it's already been an hour on this video, but we have, this type of mid channel and this macro channel. This stuff can blow your mind, okay, guys? So I think you're gonna love this. Okay, so stick around. But then we have these. I love identifying patterns. Okay, then we have this. I just noticing it looks kind of like a swastika, but that wasn't intentional. Okay, I'm just trying to mark off zones of reflection. You see off the bottom, this angle of reflection, and this angle of reflection right here, or angle of rejection rather. They are mirror images of each other. Look at that. It's almost parallel. Okay. And where it meets, this is like wicks. Where it meets is right up here, and then it reflects, and it comes down to here. And this one, the parallel off of that point supports this area. And then there's this angle right here from the midline, which defines this action against the floor. And so I could hypothesize that there might be a similar movement within that triangle eventually, someday. If this is valid for this, and we also have one of these, kind of, origin lines created out of the COVID era. Well, we've just been like playing hopscotch on it, just like dancing around on that line. And so it runs through us like at this angle. And I believe that this defined the energy of the market. And how can I validate that? Well, we have parallel lines. Let me get rid of some of this stuff. We have parallel lines that run with this origin line from the COVID era. That's not the master origin line, right? I already showed you that one. But this one was formed out of COVID. And so this whole formation, it should blow your mind. Like these diagonals were formed out of the COVID era. And the system has retained that memory. The money, the bots, the algorithms have retained that memory. And look how we walked up these channels parallel to the COVID era money. We did it here, and we did it here, and it looks like we might do it again. If we do it again, then we are at the bottom of the channel that can be supported, and that means that we might be in a position where we are just going to launch up here. We are just going to launch if this is true. If my theory is true, we are going to launch. Okay. And so you guys better be ready for this hyper bullish case for crypto because I'm not fooling around. I put hours of thinking into this stuff, original thinking, whereas other guys are just watching, like their favorite YouTubers and then spitting stuff up, spitting stuff out at you. I'm developing original content, okay? And it's hard. Sometimes I'm going to be wrong. Sometimes I'm going to be boring while I think it through. But this is going to be cutting edge stuff, right? And, what do we also have? We have reflection lines. The reflection lines are what we followed on our way down. And how striking is it? These lines are also perfectly parallel. And they define the top and they define the bottom of these wicks within the context of these origin lines. So let me just start taking a couple things off just to minimize it. So you see, this was parallel. This is parallel to this, is parallel to this, is parallel to this. This was a reaction line. This is what defined it. This reaction to this to the COVID pump, which I don't know how this energy from this angle was translated into this, but it was. It definitely was, because the reaction to it, like the angular momentum, the reaction to it, you see this right here, the interaction right at support follows directly up to the top of this one, which hits a mid channel that got established, which interacted right here that caused the curving. And this memory, like this price action, was then remembered by every other one. Look at this price action, right? I mean, it's not perfect because it's just, it's proximate. But look at that. It comes right down to where this dropped to, almost to the dollar, right? This is below this midline, which is parallel to this one, and this mid channel is parallel to this. It's almost perfect. And look at this. It broke out and tested it almost perfectly. And then there should be no interaction between then and this era. But look at this breakdown. Almost directly to a parallel line to this one. This test right here, you see this. You see this wick. Almost perfectly retested that line. In fact, it did to the dollar. Perfectly tested that line. And this wick right here, and this wick, and this price action, right? Using this as a midline, and then the same kind of momentum and everything was captured in this area. And what are we doing right now? We're breaking out of it. And what happens when we break out of it? We retest it and we go on our way, right? So don't be surprised if we come back and retest. That might be your last buy-in. Around 40,000 before we have a pump, okay? Don't say I didn't warn you. I hope you watched this video to the end because I'm showing you things that other people just cannot see, okay? They don't think like me. They're using other standardized things, kind of cookie cutter formulas, but I'm really trying to break down this matrix, break down these algorithms for you and create my own kind of algorithms, which just means patterns, just very logical patterns. And what else can we see? Because I'm not done yet. Not only do we have those parallel lines, but then we have the price action within them, which I've marked in green. Okay? And this is how it cuts across it. Look at this. Look at this. It hit it right here, and that established this angular momentum, which then carried on to here. You see this wick almost directly to it. You see this wick started it off. This one connected to it. This, there was a little node right here where, if you remember, during the summer, we caught onto something. We caught onto something. It's a parallel. It's a parallel line, right? Look at these wicks. Look at these wicks. You're asking, why did they bounce here? Why didn't they just go all the way down? A bunch of them got caught on this parallel line. And look at this price action. It got caught on the midline. And look at this price action. It got caught, right, on this midline, right? So that is definitely established and valid. But then look at this. Look at this beautiful Z pattern using this green line as kind of support to climb up, and then hitting this parallel origin line, coming all the way to the top of the parallel origin line, bouncing off of it, and catching the green one to the top. All right? So this is just a mathematical outcome of the interactions of the origin lines, the COVID origin lines. And what we see is it playing out again. You get in here, you get into these green lines, then you interact with the purple one, right? In this case, it was a turnaround, and then you follow the green one back up. It has nothing to do, the path of the price action has nothing to do with the purple one. The purple one constrains it. The green ones direct it. It's very weird, very interesting. And what you'll want to notice is this is a lightning bolt, whereas this is like a Z pattern. Okay, I mean, both are lightning, but this one's a double Z, whereas this one's just a regular Z. And that's a reversal pattern, by the way. It's a mirror image reversal pattern. So what can we say that we might expect if I just made a projection for the future? Well, we might say that we come into here, and I haven't figured out exactly where these lines should be yet. So this whole area up here is a it's work in progress, okay? It's not fixed yet. But whenever we do have the ability to kind of round out, and why did I say this was a reversal pattern? Because they go in opposite directions. Okay, so what does that mean? Don't compare this to this. That's what silly, slow, stupid-minded, just basic people do, okay? Just kidding, guys. I did it too, okay? But if you can identify this mirror image reversal pattern, or inverse pattern, or whatever you want to call it, what you find is that after this reversal, because it's reflected and backwards, it's flipped and mirror imaged, that you then get a curve on your lightning. Look at this, a curve, right? So are we going to get something like this? The flipped mirror image of this? Right? Worth considering, because a lot of guys, including myself for a while, and I'm just not sure about it now, we're thinking, when's capitulation coming? When's capitulation coming? Like we did this, and then we did this, and then we capitulated. We did this, and then we did this. When's the capitulation coming? Like, when are we going to bounce off here and go? Hey, guys, I'm telling you, we didn't capitulate up here. And we might not capitulate here. Because this is the flipped mirror image. This Z created a flipped mirror image. This is a reversal pattern for a flipped mirror image, and people don't recognize that. I've never heard anyone mention this at all. This is completely original thinking. I hope you stuck to the end because this should blow your mind. This is hacking the system, okay? This is hacking the system. This is creating my own algorithm, and it's just yeah, I'm proud of myself for thinking about these things, okay? Originally, by myself, in isolation, not with a group, not paying anyone to help me think about it, not by watching YouTubers, just thinking about it by myself, thinking it through, okay? And I'm proud of it. Because if we do end up pumping, and I'm not saying that we will, I've already shown you the case why we could capitulate. In fact, I have 3 models of how we could capitulate, but they can be invalidated simply if we don't. If we don't break under this region, then those models are invalidated, and then that means that this model has the chance to prove itself. And how might we prove it? How might it prove itself? Something like this, right? Something like this. So you see how this moved, right? This would move in kind of an opposite way, where this is the thicker area, this is the thicker area, this is a thinner area, this is a thinner area. And if we suddenly just start pumping out of nowhere, guys, like we could go from 42 to 70 in no time. How do I know that? Because we went from 29 to 60 in no time. Like there was barely a pause there. Look at that price action. Little pause here, little pause here. Right? What are we doing? We're just having a little pause. Where was that little pause? Right here? We're having a little pause right there. It's possible that if we break through this, for all those other charts that I showed you, if we break through it, it's possible we are going to skyrocket. And I don't want anyone to be shocked if we do and feel like you missed the boat or that I was bearish and so you guys blame me because one of my videos was bearish. I told you I'm not bearish or bullish. I don't care about that stuff. I don't care about who you call bears or bulls or whatever. I think all of that's BS. And I think, to be honest, only stupid people talk like that. Okay? Only stupid people talk like that. Okay? Smart people just try to figure out, validations and invalidations. And you see a whole bunch of idiots like talking about, oh, bears are going to be in tears or all this stuff, Who cares? Who cares? The only thing that matters is if you have, a theory, a system of logic that you're applying consistently, and if you have validations and invalidations, not what calls you make, not what you think is going to happen, right? Not wishful thinking. And I told you guys, right? It's going to melt faces, all this type of weird stuff that people say. Just ignore all of that. Just make your own theory about the market. Do you think it's bullish or bearish? And then have validations and invalidations so that if we reach a certain point, you flip your thinking. And you don't care because you're going to win either way. You're going to win either way because you're prepared for both. Right? And I've showed you multiple ways to think. These are the reactions that we've had. And it's very similar. I don't know why that's pointed like that. It's very similar. See this kind of M right here? This W is a mirror and flipped M, right? What happened after that? It got rejected, came down, and then put in another thing. You can see I haven't even played with this in like a week, right? You can see like I had to like stretch it out to like figure out where it went to. I had this model set for a while. I told you guys it was going to blow your minds. I told you like 2 weeks ago I was working on this. And look at this. I just wanted a little bit more confirmation. But look, this M right here, right? I mean, this W, this M. I do believe that these are playing out as a mirror image, these reactions. And these are the mirror zones. There's one thing that threw us way off here, right? So you have this nice long line here. But in this case, it got distorted. It should have been like this, right? Something like this. Right? Something like that. And also it dropped too far, so maybe this should have been over here. So maybe like this, right? But the drop, the sell-off and the drop, look at these wicks. The sell-off was just so harsh that it just like dropped really fast. And then people were in disbelief, so they started to buy because they've already had like this rally. So they're in disbelief. They think, oh, okay, we're just gonna do like one of these things. Like we're gonna come back up. We're gonna come back up. They were in disbelief. And so we got a little extra price action. But the smart money was like, nah, we're dumping this. We're dumping this. They didn't even wait for this. They said, we're dumping it. And then the dumb money said, okay, I'll buy it. And then the smart money said, I'm going to wait for down here. And now we're buying it. Now we're buying. Right? Right? Sell here. This is just a neutral reversal. Buy here. Second chance to go. Could be what's happening. This is the hyper bullish case for crypto that I'm making if we don't break down. And if you look at these circles, see if I can align that. You can see how the price action is climbing along the side, climbing up the side, right? You can see how it's being restrained in this circle, being restrained in this circle before it breaks out, which we would expect it to break out right here. What's that number I keep targeting? 46,000. And then we just skyrocket, right? Possibly. Or it could be a bull trap and we just break down. Fall down, right? But it's food for thought. Food for thought. And if we break down this way, you'll know that it's invalidated. Validations and invalidations, right? And then setting key levels to take profits, which I already showed you those things, right? Right? And all the other charts. That was a lot of alpha for the day. Stay safe, guys, and happy trading.